Hi guys, you are welcome to my channel. Today we'll be looking at how we can trade gold on the 5 minutes time frame using price action with ICT. Okay, on this side of the chart we have bullish trend in the sense that price has been giving us a low, we have a high, we have a higher low here, higher high, higher low, there is higher high, higher low, we have higher high, we have higher low, then we have a higher high. Let's just say we have a higher high here, then we have higher low, higher high, but that didn't last. Then we have like a change of character here, and that didn't last either, where we have a lower low, we have this higher high, higher low, then higher high, and we have another change of character for us to have a lower low. So this particular low is lower than this low. So that's a change of character. We have the initial change of character around here, thinking the bullish price moved and stopped. Now we might start seeing downward pressure. But price gave one more push, and we can see before we now have the final change of character. Now here we have the bullish trend, where we have higher high, bullish trend, where we have the higher high, higher low, right? And what we are now seeing here is bearish trend, in the sense that we now have a change of character, where we start to see lower low, change of character happened around here. Then we have this lower low, lower high, then we start to see lower low. Okay, so this in line with the explanation in previous videos. If you go to the channel, check the last two previous videos, you see the explanation where the pullback, this pullback, first pullback will be the stop loss. Then you enter at the breakup structure. You enter this breakup structure. Breakup structure in the sense that you have this lower low, lower high, then as you break that lower low, you have a breakup structure to tell you that price will continue downwards. So you enter that breakup structure, then the pullback, the distance of the pullback will be the measurement of the stop loss. And your TP will now be maybe ratio 1 to risk reward, ratio 1 to 2. Okay, or ratio 1 to 3. But my TP for risk reward, as in the distance of the depth of the stop loss compared to the depth of the take profit, ratio 1 to 2. That's what I have here. I could have as well measured ratio 1 to 3. Okay, there's the distance of the take profit 1, 2. I could have well extended it to 1 to 3. Okay, something that I can do. All right, and price might get there, but I see price going further down. Okay, but that's just the way the strategy, is being used. So now we have the fresh development of bearish trend, fresh development of bearish trend happening around here. Bearish trend development. We start to have lower high, lower low. Okay. Now I expect a pullback to happen around here. Pullback, but I do not expect the pullback to extend beyond my stop loss. You can even see what price is doing. That's just going down. So ratio 1 to 2 is almost done. Here is ratio 1 to 2. I think it's going to give me ratio 1 to 3. So there's like a range here. We have the range here. As if we have a breakout, but it failed. Now we have the range here. We have the breakout, and we have the pullback, and then we have the drop. So the strategy is always range breakout, wait for range breakout. Breakout. Okay. Then try pullback. Alright. And then try pullback after range breakout. And number 3, allow break of structure. Okay. Still dropping. Still dropping. Then number 4, stop loss equals distance of pullback. Number 5, enter after break of structure. Enter after break of structure. Or enter after second pullback. But we are not having second pullback. No second pullback here. It's almost giving us 1 to 3. 1 ratio 1 to 3. At this point, we can move stop loss. Okay. At this point, we can move stop loss after price. Okay. Advisable to move stop loss at this particular point. So That's the idea. Let it pull back. Now enter after break of structure or enter after second pullback. So for this particular scenario, maybe we might have our second pullback now. So maybe possibly we might have the second pullback. Possibly. Now with the explanation, swing guy and number 6, swing guy or swing low equals is always identified after second candle formation. So like I explained in the previous videos on the channel, after second candle formation, you have swing high, swing low. So range breakout is the range, and this is the breakout here where you have change of character. Okay, there you have change of character. This is the range, this is the breakout. Identify pullback after range breakout. So these are pullback. Allow break of structure, this break of structure. Alright. Stop loss is equals to distance of pullback. Now this distance of pullback, same thing with the stop loss. Now enter after break of structure or enter after second pullback. This is the first pullback. It's more like the second pullback, but it's far from the first pullback. So it might be tricky. Now swing high or swing low is got to after second candle formation. So for that 0.6, this is swing low, but it's identified after 1, 2. It's not this doji. This first bullish candle, this second bullish candle. That's now once the two are formed, you now have swing low. This first bearish candle, this second bearish candle. As much as you have these two formed, you have swing high. This bullish candle, this second bullish candle. The moment you have these two, then you have your swing low around here. So point number 6 is just to help you identify swing high, swing low. Of course, that will now guide you to know higher high, higher low, higher high, higher low, or lower high, lower low, lower high, lower. So that's the strategy. It's a good one. Make sure you back test. It works for forex, currency pairs, works for gold, oil, S&P 500, a good one. Allow range breaker, of course. Allow the trend to get trend momentum to reduce. Of course, you have range. Allow range breakout where you have change of character. Then allow first pullback. That first pullback will be your stop loss. Like you have change of character here. Here you have a change of character. Now you're expecting first pullback to happen somewhere around here, but that never happened. Rather, it failed. And you have a repetition, and now you now have the first pullback. So this where you have your range breakout, and then here you have your pullback. And if the moment you have break of structure, enter your trade. So you can enter the trade at break of structure, or you can enter the trade at second pullback. Now, if you have second pullback somewhere around here, so the moment you have Of course, this will be bullish candles. The moment you start to see 1, 2 bearish candles showing that you have a swinger, then you can enter around here to ride the trend. But for this particular trade, we do not have second mover. We came on the chart, so this has formed, and then I quickly enter the position. So that's that for today's explanation on how to use the price action stroke ICT strategy. It's a good one. Back test it. Try it out on demo before you go live. Now visit our website to learn more on how to use this strategy. www.binfxtrader.com. Visit our website to learn more. See you in the next video.